Good afternoon, and we're looking at gold. Now, gold, obviously last week had a little bit of a tank and got down yesterday to lows of 1848. Today, we've edged up a little bit. The high's been 1890. We haven't really sort of done a great deal. Currently, we're trading around 1883. So we're not far off of where we closed yesterday. Our daily pivot is at 1870 and our weekly pivot is at 1887. So we are above the daily, not quite making the break above the weekly yet, which really is what we need to do. We want to get above here, stay above here. Actually, we need to get back above this little bit here, which is the 1940 area. So that's really where gold needs to go and hold above to take the pressure off the downside. Now, that triangle formation that we were watching that didn't get really to the apex sort of come to fruition really a bit, and it's quite a simple mathematical calculation to work out what the measured targets are. You just take that high, and that is 2072. You take the low of that, which is 1863, and all you do is deduct one from the other. So that gives you a total of points of 209. So you normally measure the height of the triangle and then project that down. So you've got 209 points making up the high. The break point was around here at 1913. So all you do is put that 1913 in minus 209, and that gives you a total downside objective of 1704. Now, obviously, it's like anything else. You have to have a set criteria in place for this to come to fruition. If we look down at the 1704 area, you can see that it is around here where we sort of stabilised at the beginning of the year. So, all down around this little area here. So even though gold would still be of good value down there, we do not anticipate it going there, or I don't anticipate it going there quickly. You've got the 200-day moving average also coming in that is going to support the market. However, all this depends on whether or not this fails up at this point here. So if it fails towards the 1900s, 1910, then you can take a really good educated guess that it's not going to go any further on the top side, and then you can enter a short position because your stops will be above those moving averages, and therefore giving you very little risk on the top side and much more potential for a downside move. Obviously, we go above that designated resistance at 1940. We reverse any short positions and go long, looking for a test of the recent highs that we've seen. Good luck. I'll catch you on the desk in a bit.